If you're currently holding XRP in your portfolio right now, or if you're holding DOGECOIN in your portfolio, maybe you're even holding SUI in your portfolio and you've seen the recent breakout that has happened over the past week or two, this may very well be the most important video that you watch all day long, potentially even all month long, because what I'm going to share with you over the next few minutes is what's happening on the Bitcoin dominance price chart and some major signals that are flashing right now on some key indicators for the Bitcoin to the US dollar price chart that tells us what is likely to happen next for the altcoin market if you hold XRP, DOGECOIN, or SUI, or even virtually any other altcoin. These three just happen to be some of the most requested on the channel. So if you guys want us to talk about other altcoins, make sure you comment them in the description below. As always, comment 777 below if you're feeling blessed. If you're feeling bullish, let's run it. All right, bull runners, welcome back to the channel. So to kick this video off, we're going to start it with an XRP giveaway. We're giving away $100 worth of XRP this week. If you haven't entered in to win, it's extremely simple. You go to Twitter. I'll leave a link to our Twitter account in the description of this video. It's Bull Runners HQ. And all you need to do is like the pinned post at the top of our profile, comment XRP on the post, and then simply sign up for Blowfin using our affiliate link. It's one of the top leverage trading exchanges that you can trade globally. And we're going to announce the winner inside of our daily email newsletter this Sunday. Plus, when you subscribe to the newsletter, you get our free ebook called Altcoin Secrets. So you just put in your best email address so we know where to send it. And over the next few seconds, I'll share a secret with you guys that you can leverage to be able to earn passive income in crypto regardless of market conditions. Because listen to what Brad Garlinghouse said right here in this clip on stage.
Here in Singapore, I believe you get paid once a month. In the United States, you get paid once every 2 weeks. Has anyone ever thought about why you get paid once a month or once every 2 weeks? It comes down to the friction of payments. And if we can remove the friction of payments, why can't you get paid every day? Or even more crazily, why don't you get paid every hour or every second? You could have a stream of value showing up in your whatever repository of value. Now, why you need to get paid every second, I'm not sure. But I do think there's a lot of dynamics that have been built around getting paid every 2 weeks or getting paid every month. And as we remove the friction of payments and make that dramatically easier, I think you're going to see secondary and tertiary effects that are very difficult to predict, just like we couldn't have predicted Grab 20 years ago.
So the secret to getting paid every second or every hour or every single day is possible through things called liquidity pools. For example, in this pool right here, every 24 hours, I'm earning roughly $24. And over the course of 30 days, that's about $736 simply by providing liquidity through a decentralized finance exchange. Through this liquidity pool, I'm earning roughly $122 every 24 hours. And over the course of 30 days, that's roughly $3,600 per month in passive income, all by simply providing liquidity rather than just leaving it in my bank account and earning a tiny little APY. For example, American Express is about 3.7% APY. That's annual percentage yield. Capital One is 3.6%. Barclays, 4%. So banks will pay you roughly 3 to 5% APY by keeping your money in a bank account. So for example, if I were to keep, let's just say $10,000 in any one of these accounts, and if I earned on the upper echelon 5% APY, I would times that by 0.05% annually. That's about $500 per year. Now, if I divide that by 365 days, I'm only earning $1.36 per day. Whereas if I were to take that same amount, even less than that, as you can see right here, $8,900, and provide that to a low risk liquidity pool that has a high amount of users that are interacting with the exchange on a daily basis to generate fees that go into the pool to pay out the yield, then instead of earning $1 per day, I'm earning over $20 per day. And I can simply harvest that yield and add it back to the liquidity pool, or I can take that, I can put it in my bank account, I can use it to buy more crypto, or I could use it to cover subscription services. For example, with Altcoin Pro University, you guys have seen how we launched this a few months ago. It's only $97 a month. So earning over $20 a day in yield, that takes about 4 days to pay off that monthly membership. So these are the type of strategies you guys will learn inside of Altcoin Pro University. And like I said, if you're not happy for whatever reason, we have a 14-day money-back guarantee. So when you get started through the link below, I'll leave a link directly to this post made by DeFi Mo, breaking down exactly how to be able to get this set up in a few short steps that shouldn't take you longer than an hour. In fact, some people can do it in like 20 minutes or less. If they already have Solana, they already have their wallet set up. But if you're brand new, this video is step-by-step. It's 11 minutes long. And although I make no guarantees because this is for example purposes only, your income results are going to vary depending on how much income you provide to the liquidity pool based on your risk tolerance. Because as you can see in this pool right here, I provided $44,000 and the yield at $127 per day is because of how much value I provided. Now, if I were to provide more, the yield would be higher. And this is all possible because these cryptocurrencies have these decentralized protocols. For example, like Solana, $76 billion market cap, trades on an exchange called Jupiter. And if you look at Jupiter's aggregator right here, you can see in the past 24 hours, there's over $2 billion in volume, which means there's over $255 million in fees annualized from people trading on this exchange, because Jupiter has been 8 years in the making. They actually just released, after 50,000 hours with their engineers and their developers, Ultra V2, which allows for better swaps, dynamic execution, gasless support. So for those of you that are used to dealing with Ethereum and paying high gas fees, they're removing a lot of the major pain points to deliver a better trading experience. And no, this is actually not sponsored by Jupiter or Solana. I'm sharing this with you because this is one of the secrets to be able to generate higher yield than you would in a bank account, because the banks are hosing you guys, using your money to generate fees, revenue, loans, all of that stuff, and they're paying you a fraction of the amount. In the decentralized finance space in crypto, there are hundreds of thousands of users trading every single day, swapping in and out of cryptocurrencies on these exchanges, and they use these fees to give back to the community in a decentralized way. So that's how you're able to earn these yields. Now, if you guys want to learn how to do that and you're already an Altcoin Pro University member, then click the link in the description. It'll take you to this post right here. That's the new DeFi yield opportunity. And if you're not a member, it should take you to this page right here. You could watch this 13-minute video that I made for you explaining everything else that's offered in here. So I'll let you guys watch that in your own time. But even with $1,000, I think you would earn roughly $3 a day, which is $100 a month, which covers the monthly membership. And you guys don't even need $1,000 to start, because for learning purposes, you do a very small amount to test so you can get a better understanding of how DeFi works. Because liquidity pools are one of the best kept secrets to be able to grow your portfolio if you want to accumulate more altcoins like XRP, SUI, DOGECOIN, Solana, you name it, even Bitcoin. Because if we look at the Bitcoin to the US dollar price chart, Bitcoin has broken out since the 20th of April from, $84,000, and it's sitting at $94,000. We saw a breakout like this in the past after Bitcoin had pulled back drastically from about $64,000 down here to $29,000. In one of my previous videos, I showed you guys the different types of divergences. For example, on this one right here, we can see a lower low on the price chart on the right-hand side of the screen back here by July of 2021, but yet the relative strength index was making a higher low, which is simply a regular bullish divergence and a reversal pattern where the price rebounds off of the lower low and inevitably makes a trend reversal. And that's what we're starting to see right now for Bitcoin on the left-hand side of the screen, because the price chart right here from the 28th of February made a lower low on the 12th of March and then the lowest low on the 7th of April. And then sure enough, if you look at the relative strength index at the bottom left-hand side of the screen, the 26th of February, we were below 30 on the RSI, and then we put in a higher low by the 7th of April while the price chart put in a lower low. Sure enough, Bitcoin rebounds off of $75,000 and breaks out to the upside. Now, on the right-hand side of the screen, we can see Bitcoin was putting in higher highs right here on the price chart until about the 7th of September, until this major bull flag was formed, where Bitcoin sold off from $53,000 down to $40,000, a 24% correction. And so if we bring up the stochastic RSI, also the relative strength index for Confluence here, we can see a regular bearish divergence because the price chart was making higher highs, but yet the key indicators were making lower highs, such as the stochastic RSI. We can see this bearish cross right here at the end of July of 2021 when Bitcoin pulled back from $42,000 to $37,000. We put in a higher low than the previous low on the 21st of July. We rebounded off of that, and then we put in a higher high, but yet the stochastic RSI put in a lower high, as you can see right here in the middle of the screen. While the price chart was in an uptrend, forming higher highs and higher lows, the stochastic RSI was in a downtrend. Now, even for the relative strength index, we just continuously put in lower highs all the way until the 5th of September when Bitcoin topped out and then saw that 20+% correction. The RSI got rejected from about 67, came all the way down to 35, and then Bitcoin broke out higher. So the real key to understand here, what you must do right now, is pay very close attention to what I'm about to share with you, because it's about to happen again. Because on the left-hand side of the screen, what can we see? Well, number one, the stochastic RSI for the K line and the D line is at 91 and 89 in overbought conditions. We experienced a bearish cross up here close to 100, but we haven't confirmed it until we pass below 80. So just because we've seen a bearish cross above 80 doesn't mean the stochastic RSI is going to drop down right away, because we could technically continue higher into this resistance. Because if we were to use the fib retracement tool right here and draw from the high of January to the local low of this correction, we can see that we just got rejected from the 618 retracement level. So in my opinion, it's very similar to what happened between the 26th of July of 2021 to the 1st of August, where at some point when Bitcoin peaks out, whether it's right now at the 618, or we move a little higher to the 702 or the 786, which would be roughly around $98,000 to $101,000, $102,000. What I think that would look like on the price chart and the key indicators is similar to what we saw here back from July of 2021 until the 24th of August, and some type of divergence would play out. So in the short term, we could see a pullback like what happened here for Bitcoin from $42,000 to $37,000. And that could lead Bitcoin to fluctuate between $90,000 and $92,000. It's very well possible. Or if we just continue to march higher, at some point, I would expect a deeper pullback for Bitcoin, anywhere from 20 to 30%, causing the relative strength index to reset closer to 50 or even below 50. Because the RSI on the left-hand side of the screen right now currently is at 67. And if Bitcoin pushes higher in the short term, that would look like a blow-off top for the RSI to come upwards above 70, to do something like this with the price breaking out even higher. And then when Bitcoin experiences the next major 10 or 20% correction, the relative strength index would then pull back. Same thing for the stochastic RSI, depending on how low that brings it. It'd be something like this right here on the right-hand side of the screen. It brought the stochastic RSI back down closer to 50. Now, it's not going to look exactly like that. I'm just giving you guys an example here. But if Bitcoin stays in the uptrend and we see a push higher for Bitcoin, similar to what happened after the 5th of August of 2021, where Bitcoin started to put in a higher high and the stochastic RSI put in a lower high, we're just going to watch this, because then the stochastic RSI could roll back around on that rally. And while Bitcoin is making a new high, if the stochastic RSI is making a lower high and the relative strength index is making a lower high while Bitcoin is breaking out, that would be the start of a bearish divergence that we need to keep a close eye on, because it's eerily similar to what happened to Bitcoin by September of 2021. And the last chance that people had to accumulate during that bull run was right here by the 21st of September, after the stochastic RSI had reset all the way down here below 20, and then the RSI was all the way down here at 31. So I do not like to buy when key indicators like the relative strength index or the stochastic RSI are in overbought conditions. And we're pretty much there for the RSI at 67, and we're definitely in overbought conditions for the stochastic RSI on the daily. Even with global liquidity, this yellow chart you can see here, if I zoom out, breaking out, I do think Bitcoin is going to continue higher, but I don't buy breakouts, I buy pullbacks. In the most ideal situation to be able to accumulate for Bitcoin is if we come all the way back down to test this resistance right here from the 25th of March, and also it was this support for this wick right here on the 13th of January. I would want to see Bitcoin pull all the way back down within this range right here, while the RSI resets all the way down below 50, even below 20 down within this level right here for the stochastic, and the relative strength index somewhere around 30 or even below 30 for Bitcoin to see a bounce from that level right there. This is what I would want to see. Now, we don't know how deep the pullback for Bitcoin is going to be. We might not come down to this level because Bitcoin might just do something like this and break out to the all-time high or even higher. So this is why we need to look for confluence on these key indicators right here. And we're going to share that with you every single day on this channel when you subscribe and you like this video. Now, I showed this in a previous video right here from Marty Party on Twitter. I thought this was a great post with the Wyckoff schematic here in these different phases and what happens after the spring phase from the lowest low to then go into phase D after phase C for the SOS phase, where the price coils up before breaking even higher in the markup. And so Bitcoin just rebounded off of the spring right here on the 7th of April. And now we are in the SOS phase, which is where we see some volatility in the short term. You know, Bitcoin pulls back anywhere from 5, 10, maybe 15, 20%. And we see some type of pattern, which could be a bull flag, a symmetrical triangle, a falling wedge. It doesn't matter what that looks like. The key point to understand is this. Behind the scenes right now, there are major partnerships and there are major utility expansions for specific altcoins to keep your eyes on. For when Bitcoin's dominance tops out and drops, that liquidity is going to flow into very specific projects. And those are the ones I'm talking about in this video. The reason why XRP is one of those projects is very, very simple. Strategic partnerships that are leveraging the utility that Ripple provides. Listen to this.
Settlement between banks. So today, if Morgan wanted to send $10,000 to London right now, the fastest way for her to do that is to drive to Newark or JFK and fly it there. Our view is, in a world of the internet, you can stream video from the space station. You should be able to do real-time settlement between banks, and we sell technology to banks to do that.
And the banks are getting on board with this because they know there's a lot of paper pushing and also a lot of money attached to those settlements.
For sure. So we have over 100 banks working with Ripple today around the world. I think the vast majority of banks, like 99.9% of banks, actually are paying other banks, the global money center banks like JP Morgan or Citibank, to make those settlements. So a lot of the banks are very excited about democratizing how these global payments flow.
There's a belief that, you could transform the global payment system over time. Although then the alternative argument is you need a centralized, you can't have it decentralized, that it actually benefits from efficiencies. I would assume you come down in the latter.
Yeah, for sure. I think anytime you can do something without that central counterparty, you're going to reduce friction, which is measured by time, cost, speed. So by removing that central counterparty and going direct from point to point, you can skip going from the Bank of David to the Bank of Morgan to the Bank of Mike. You just go directly to the Bank of Mike.
So if the immediate opportunity is efficiencies in this area of the actual kind of nuts and bolts sort of plumbing of the financial system, how does that relate to the value of the Ripple tokens or of the Bitcoin or cryptocurrencies? They're taking on a separate life, it seems, from the future of adoption of this technology.
It's a great point, and I think one of the things we all have to remember is that the value of a token over the long term is really going to be derived by its utility. What problem is it solving? How big is that problem? How many customers do you have? There's no question there's a lot of hype in this system, and I don't actually think that's a good thing. For Ripple, we use this digital asset called XRP to settle liquidity needs between banks. So today there's $27 trillion parked at different banks around the world so they can make payments between each other. Our view is you can use a digital asset like XRP to do that in real time. Because XRP has been so efficient, it settles a transaction about 3 seconds compared to Bitcoin.
So it just passes through that currency for that period of time.
That's correct.
So Brad said something very key there. And instead of having to go through all these middlemen and all these centralized authorities, you're directly going from your account to someone else's account by becoming your own bank. And so in the DeFi space, when someone interacts on an exchange and those fees are generated, those basically go right into the accounts of the liquidity provider. So that's just what I was talking about. And Ripple's doing that on a massive scale with banks across the globe to be able to cut out the Nostro and Vostro accounts. But these strategies right here are the underground strategies that we teach inside of Altcoin Pro University. And they're completely legit. They're completely legal. It's just that 99% of the population doesn't know how to do it. So they're just keeping their money in their bank and the banks are taking advantage of them. But smart people like you are taking action with these strategies because you're watching videos like this. Check this out. A new MasterCard document mentions XRP as a bridge currency to allow fast and cost-effective remittances. So now by leveraging the DeFi yield strategies inside of Altcoin Pro University, I'm able to take that yield to be able to accumulate more XRP if I want without using my money because I'm now using the yield, which is generated from fees, OPM, other people's money to grow my portfolio. So can you guys see the power behind that? Obviously you can. Now, look at the XRP chart right here. When we compare it to the Bitcoin price chart in the middle and also the XRP price chart at the top from 2021, we can see some similarities here. So when Bitcoin was breaking out after July of 2021 and rallied all the way up to $42,000 and saw this little pullback, look at what happened from XRP. XRP bounced from 52 cents all the way up to about 77 cents and dropped just a little bit to about 68 cents for this consolidation period before breaking even higher to about $1.37. And so what we can see at the bottom of the screen right now is XRP is breaking out of this downtrend since the middle of January right here, where we just seen lower highs. So on the daily chart right here, we can see that XRP broke above it and is holding this descending resistance as support right now. Similar to what happened at the top of the screen when XRP broke out of the downtrend from the 6th of May until the 21st of July, when Bitcoin sprung off of that lowest low, we saw liquidity rotation from stable coins back into altcoins and Bitcoin. And so XRP cooled off for a little bit with Bitcoin, and that divergence that I just showed you guys where Bitcoin was putting in higher highs on the price chart in the middle of the screen, but the indicator was putting in lower highs. Well, we then saw XRP put in a higher high with Bitcoin as well too. So it depends on what's going to happen with Bitcoin. If Bitcoin pushes higher, then I would just expect XRP to push higher in the short term, closer to $2.50 because XRP is at $2.25. But you have to be ready for a bigger pullback for Bitcoin because when that happens, that would lead to a bigger pullback for XRP and a better entry opportunity to be able to dollar cost average and lower your average cost basis for XRP. Because I do think over the next week or two, XRP could continue higher, but I do think there's going to be a pullback for XRP before we break the all-time high for the end of this year. The real question is how deep this pullback would be for XRP before we see a retest of the previous high and what Bitcoin's price chart looks like at that time that XRP is pulling back and how deep Bitcoin's pullback will be. Because nobody knows how deep that pullback will be. You just have to have a solid strategy that allows you to accumulate more. And that's why we share those DeFi strategies with you guys inside of Altcoin Pro University. Also, diversification strategy. Check this out. DOGECOIN ETF was just filed at the NASDAQ to list a 21 shares DOGECOIN ETF, meaning you could one day invest in a meme coin the same way your grandma buys boring stocks, making crypto more mainstream because a lot of people are worried about downloading crypto apps that they've never heard of or extensions on Google Chrome. They would rather just keep it simple and download something in the App Store, push a button, and boom, own a piece of Dogecoin that they heard Elon Musk talk about and all their friends told them about years ago. But you have to be careful because by the time all of that is approved, If you're waiting to accumulate and you're not looking at a chart of Dogecoin, then that's how you get wrecked. For example, everyone that was buying Dogecoin when Elon Musk was talking about it on Saturday Night Live, that was the top. They didn't even look at the chart. They just went on and they listened to him and they bought and they got absolutely wrecked. So that's why you're listening to this video, because if we look at the Dogecoin price chart and we compare back to the past, well, Dogecoin has pulled back since December with Bitcoin in this falling wedge, and we just broke from this descending resistance. And so if we look back in the last bull run, we saw the same thing happen for Dogecoin. We saw the price pull back on the 8th of May from about 70 plus cents at that high to about 16 cents. And we broke out of this triangle pattern right here at the end of July, and we cooled off for a little bit after breaking out, pulling back from 23 cents to about 19 cents. And then we saw another breakout after that consolidation phase. And I think that's what's coming next for Dogecoin. So if we push up a little bit further in the short term, or if we just start consolidating right now into May before the next major breakout, the next resistance for Dogecoin to watch is all the way up here around 27 to 30 cents, because that was a major support on this pullback on the 19th of December. It also was resistance right here on the 15th of February. And as you can see on the bottom of the screen, it was the same thing that happened for Dogecoin on this pullback after the high right here to the 12th of May to like the 29th of May that acted as the zone of support. And even until like the 16th of June of 2021, then once it broke down here, it rallied back up into it, got rejected. And then on this breakout, that was the next zone of resistance before the bear market kicked in. And so I do think Dogecoin will go higher over the next few months. The real question is if we retest the high of the 25th of November, the all-time high, or if we put it in a lower high, and that's the end of the bull market. So there's not much time left to make money in this crypto market. And depending on how high this breakout is for Dogecoin, you do not want to be buying the breakout. You want to be accumulating during the consolidation phase, similar to what happened all the way back here at the end of September leading into October of 2024, and also all the way back here in April of 2021 to buy Dogecoin before the major breakout happens, because we saw the same thing happen. Look at this, the pullback at the end of March to roughly the 4th of August. We break out from this descending resistance in the middle of September, rally all the way up to 12 cents, and we pull back, consolidate for a little bit. And then we see some choppiness on the way up, breakout, pull back, then absolute price explosion to 43 cents, which was from this low right here at the beginning of October to that breakout, about 40 days to rally over 300%. It happens really quick, and you don't have much time to prepare. So a lot of newbies came into the market and they started buying Dogecoin all the way up here above 35 cents to 48 cents, and they've been having to hold, watching their portfolios bleed out because they did not accumulate at these levels that we're going through right now. Even all the way back here in 2021, we saw the same thing happen. We break out from this descending resistance on the 1st of April. We pull back a little bit, consolidate, and then we see an absolute explosion to the upside. So there's not much money to be made by buying all the way up here on these explosions. So when Bitcoin starts to break upwards of 28, 29, 30 cents, even 40 cents, I'm not going to be buying Dogecoin at those levels. In fact, I'm going to be screaming the exact opposite, which is going to draw a lot of hate to the channel. Of course, because retail investors that never learn, they buy those breakouts and then they get absolutely wrecked on the pullbacks. So right now, I do think the last opportunity to accumulate Dogecoin is coming up over the next 1 week to 4 weeks over the next month here. And depending on how low Dogecoin goes during this consolidation phase, to put in either a higher low or a lower low on the price chart will be the last opportunity before the major breakout. So you guys have a limited window and a limited opportunity here. And also, it's extremely important you pay attention to token unlocks, because look at this, the top 7 token unlocks of the upcoming weeks between April 28th through May 4th over the next 4 days. SUI is one of the main ones. We're going to see 32%, $300 million worth of tokens released. And additionally, the next 6 token unlocks combined will total just over 150 million. So SUI is larger than the combination of Omni, ENA, Optimism, UDS, Ronin, KMNO combined. And token dumps don't always necessarily mean that there's going to be a sell-off, but this size is hard to ignore. And especially after SUI has broken out from $2 all the way to $3.50, if we see a pullback with Bitcoin while those tokens are getting unlocked, then that could mean a bloodbath for SUI, and we could see it come all the way back down to $2.80. So if you're holding SUI right now and you accumulated all the way down here at April around $2, or even if you bought when we were talking about it inside of Altcoin Pro below $1, our community was able to accumulate around $1. Well, let's just say for example purposes only, you put $1,000 into SUI at $1.04. Well, right now it's up 237%. That'd be worth $2,370. You pretty much paid for your membership with Altcoin Pro University with that call. Now, would I be buying SUI right now? No, I wouldn't. Now, that's not financial advice. That's just my own personal opinion. And I could be wrong here. SUI could continue higher. I think if Bitcoin continues higher in the short term up to a 702 or 786 within this zone right here, I think SUI could march higher in the short term, even potentially retesting the previous high on the 5th of January at $5.40. It's possible. With how drastic this recent breakout was for SUI, I don't think this rally is over for this bull market. I think SUI may cool off though in the short term. This is what I'm preparing for, SUI to cool off before continuing higher. And a better time to accumulate SUI is when it pulls back and it cools off. And if it doesn't happen, it just keeps breaking higher, well, you win some, you miss some. And the goal here is to lose as little as possible, because buying a breakout like this, if you see a pullback from $3.51 to $3 or even lower, because you guys can see this was a major resistance right here. It also was a support right here all through this level. So right at $2.89, $2.90, this is the zone that I would watch to potentially place some limit orders for SUI. Because with those token unlocks and that recent breakout, I would expect a lot of people to want to take profit. Now, if they don't take profit and SUI continues higher, then that pullback will just happen a little bit later and it might be a little bit steeper before SUI continues to the upside, or depending on where Bitcoin's at, rolls over from there. So in my opinion, the risk to reward ratio for SUI is just too high on the risk side right now, because back to the previous high, it's 50%. That's like turning $1,000 into $1,500 for $500 profit. That's if it goes to the all-time high over the next month. I personally think a pullback's coming. And what would determine SUI breaking out to a new all-time high, XRP breaking out to a new all-time high, and even Dogecoin as well too? Well, that would be a drastic shift in liquidity from stablecoins and also Bitcoin's market cap dominance to drop, because as you guys can see, Bitcoin's market cap dominance has been in this massive uptrend since the 3rd of December. And even on the macro, it's been in an uptrend pretty much this whole entire bull market, which is proving that Bitcoin is just outperforming everything in the crypto market, as it should, until we reach the end of the bull market cycle. In my opinion, I think Bitcoin's market cap dominance is going to continue higher until this trend line breaks, this ascending support right here. We can also see bearish divergence where we went up to about 62% right here on the 7th of February. And look, we experienced a bearish cross shortly after that by the 12th of February on the MACD. And the MACD came all the way down here. And we've seen a bounce recently. While we're putting in a higher high in Bitcoin's dominance, we put in a lower high in the MACD, and we're experiencing a bearish cross right now. So at some point, this divergence will cause Bitcoin to break this ascending support right here, hold it as resistance, and then Bitcoin's dominance will drop. Now, when that will happen is anyone's guess. It could be towards the tail end of this bull run, and Bitcoin could continue upwards of 70% all the way up here before that even takes place. And Bitcoin would most likely just keep sucking liquidity out of the entire market, while others, which is everything other than the top 10, bleeds out to Bitcoin as people play musical chairs trying to find mid-cap to low-cap gems. They make their profit, the devs rug. Then what do the devs do? They dump that money into Bitcoin or stablecoins, growing the market cap of Tether, USDC, and Bitcoin. So until Bitcoin's market cap dominance drops and starts to roll over, similar to what we saw happen right here from the tail end of March until like May of 2021, for altcoins to go absolutely ballistic. And that doesn't necessarily mean that Bitcoin does terrible. It just means that liquidity just starts drastically flowing into altcoins faster than it does Bitcoin, causing the altcoin dominance to increase. And if Bitcoin's dominance is dropping, it doesn't necessarily mean that altcoins are doing well. It could mean that stable coins are absorbing more liquidity than everything, causing Bitcoin's dominance to drop. So I do believe a breakdown for Bitcoin's market cap dominance would be good for the altcoin market because of where we're at in the 4-year market cycle theory. But the cool thing is you guys don't need to wait for that to happen to make money when you got the skills to pay the bills. That's why we launched our Technical Analysis Essentials course inside of Altcoin Pro University as well too. And there's 28 videos breaking all of this down for you guys so you can become a master trader yourself. And that way you can have a winning game plan regardless whether we're a bullish market, a bearish market, or a ranging boring sideways. You can apply these strategies to be able to make money, to grow your portfolio for life, because crypto's not just for a bull market where you make your money and you leave and then the entire bear market you do nothing. There's opportunities to make money during a bear market that we're going to share with you guys when you take action right now and you click the link in the description below to get started. And even if you're not ready to get started and spend the measly little $97, then enter in to win some XRP. We would love to pick you. Just follow the steps on our Twitter post right here. As always, I appreciate you guys for liking this video. If you want to see more content like this, make sure to subscribe to the channel. Share this with a friend because we're backing up our trucks all the way to the bank, grabbing the bags, packing them and stacking them, leaving no bags left behind because the spending power of the dollar keeps going down in value. Banks are paying you very small percentage APY on the money that you keep in the bank. That's a fact. Inflation is out of control. That's the truth. And together, we're all running to the top. I will see you guys on the next video. I will see you through the links below. As always, you know what to do. Stay bullish.